Ever wondered what it would be like to trade stocks on a crypto exchange? Or maybe you've heard of tokenized stocks and are curious about what they are and how they work. Well, you've come to the right place. Today we're diving into the world of tokenized stocks and putting two of the biggest names in the game head-to-head, Kraken's xStocks and Binance's tokenized stocks. We'll break down the key features of each, look at what makes them different, and help you decide which is the better fit for your investment goals. First, let's talk about what tokenized stocks actually are. They are a bridge between the traditional stock market and the crypto world. Essentially, they are digital tokens on a blockchain that represent real-world shares of a company, like Tesla or Apple. This means you can get exposure to a company's stock price without actually buying the traditional share. It allows for some cool stuff, like trading 24/7 and buying fractional shares, which means you can invest with as little as a few dollars. Kraken's xStocks. Kraken's xStocks are tokenized representations of U.S.-listed stocks and ETFs. One of the main benefits is that they offer instant or near-instant settlement because they operate on the blockchain. This is a huge advantage over traditional stock trading, which can take days to settle. Kraken's xStocks are also designed to be interoperable, meaning you can withdraw them to your own compatible crypto wallet and have full control of your assets. They offer 24/5 trading on the Kraken platform, with the potential for 24/7 trading when you move them to an external wallet. Binance tokenized stocks. Binance, on the other hand, is a crypto giant with a massive global user base and a wide range of products. Their tokenized stocks are similarly tied to the price of the underlying real-world asset. A key draw for many traders is Binance's low trading fees, which are generally lower than Kraken's. The Binance ecosystem also offers a variety of other services, including staking and yield farming, which might appeal to those who want a more integrated platform. However, it's important to note that Binance has faced more regulatory scrutiny than Kraken, and its tokenized stock offerings may vary by region. Key differences and final thoughts. So, how do they stack up? While both platforms offer the core benefit of tokenized stocks, their philosophies are slightly different. Kraken's focus is on security, transparency, and regulatory compliance. They have a strong reputation for keeping client funds safe and have never had a major hack that resulted in the loss of customer funds. Binance, with its massive scale and lower fees, is often chosen by traders who prioritize trading flexibility, lower costs, and a wider variety of assets and products within a single ecosystem. In the end, the best choice depends on what you value most. If security and a proven track record are your top priorities, Kraken might be the way to go. If you're looking for lower fees, a larger selection of crypto assets, and a highly integrated platform, Binance could be a better fit. With that said, thanks for watching and until next time.